Bitcoin is up, with many analysts saying that it should be heading into the 90,000s. Gold is making new all-time high after all-time high, while the DXY, the dollar index versus other currencies, is crashing and stocks are down. Oh, and by the way, yields are up. So if anyone can make any sense of this absolute confusion, we've got James Lavish, Dave Weisberger, and Mike McGlone here, the three greatest in the game, when we need to make sense of this nonsense, because frankly, I have no idea what the hell is happening. Welcome to Macro Monday.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. Can we go ahead and bring on the three gentlemen now, the four amigos, I guess we will be. You guys can be the three amigos. Do the thing. Do you remember the Three Amigos? That was a great movie. Mike, I have to imagine that the morning meeting went something like this.
Yeah.
Well, hands in the air. What the hell's going on?
Good point. You nailed it. Just some key headlines. Stuart Pauls, our economist, just pointed out IMF World Economic Outlook tomorrow. The trend in GDP estimate revisions is downward. Okay, we get that globally, everywhere. Eric Heidelberg is fit in for fixed income, just pointed out negativity in home builders index. Stuart reiterated that. And Gina was just pointed out, Gina's still quite bearish. She said she's kind of shocked we haven't seen more short covering rallies. She pointed out the market's in some kind of denial. She pointed out generally the market's still priced for 15% earnings growth. And that's kind of shocking with sales going down. There's a trend in downward estimate revisions in earnings. See the trends there. So the morning meeting was quite doom and gloom, bearish. And I keep the thing that really struck me was when what Gina told me, mentioned was the market's in some kind of denial. And that was kind of that really struck for me.
You know, what's interesting is I don't know if it's it is definitely in denial in ways we can see that, though futures are selling off. Again, Mike, you and I have talked about this endlessly. The clues are in the bond market. Look at the bonds. I mean, the bonds are again selling off. You get the 2-year to the 30-year spread is so wide. It's the widest it's been since what, in the 90s? I mean, it is wide. Am I quoting that incorrectly?
That's pretty wide. Yep, it's it's the opposite of last year.
Yeah, exactly. So I'm going to see if I can bring up this chart that actually shows that. So let's see if we can bring this up. And here's what's in my mind. Here's what's going on. Now it's the widest it's been since, and I was exaggerating. It's the widest it's been since 22, which really is blown out, that spread. What's going on? I think that investors are getting pretty concerned with Trump now threatening Powell. And so now you're starting to see that the dollar's under pressure, treasuries are under pressure. We've got the uncertainty of the budget negotiations that are coming up for a new debt limit. There's never really a limit. We all know that. But if the spending seems to be blown out still, even with Doge, that's bad, because we're going to have even more bonds that come to the market, which means that there's going to be even more need for liquidity, and there's less liquidity out there, and that's starting to get people nervous. Now, if you've got Trump turning around threatening to fire Powell, all on top of it, it all adds up to the greatest, most impactful word, the worst word for markets, which is uncertainty. And so that's kind of where we're at, and so people are piling into gold for that flight to safety. They're not piling into treasuries. That's probably the biggest, if you ask Luke Groman, this is going to be the biggest marker on the road right now, is people are not piling into treasuries, and that's an issue. So if you have a threat to the treasury being the flight to safety, then that's going to be very difficult for the U.S. fiscally. And so, funny enough, I'm going to tee Dave up here. Bitcoin is rising amidst all this, and that is a very interesting. It's a very interesting moment. Does it mean anything? Well, we don't really know yet. It could be that Bitcoin just found a local bottom for now. But it is very interesting that Bitcoin and gold are up in the face of everything else being down.
I think this is simple. Occam's razor. Two things. First, people are selling U.S. shit outside the U.S. and there's not enough U.S. people left to buy the U.S. shit. So guess what? Its price goes down. Second, Bitcoin is an uncorrelated asset to U.S. shit. It's a global asset. And if I keep hearing more about, I will relentlessly mock Mike for his beta comment. I will not relentlessly mock Mike for his intelligent comments about gold and why it matters and why it's likely to be the biggest benefit, nor his intelligent comments about oil as we careen down the world towards a global recession. Seems like it's already happening. So when I say people are selling U.S., I mean it's a very big deal, and the administration doesn't get it. Even Florida's tourism is down, and noticeably down. We have friends all over the world, and we're hearing the same thing. The media in the UK, the media in Europe, the media in Japan, don't know about Asia, although I was with a couple people from Singapore, and it's true there, are telling people, do things like get burner phones if you're coming to the US because you don't know what's going to happen to you. It's all a bunch of fear. Tourism is way down. Imports of US goods is down. And this kind of shock and awe approach, which he thought would be related to just businesses, is not only affecting businesses. It's hitting people pretty hard, and we have not seen the effects. The economy is far worse than the president thinks it is, and that is a serious problem.
It's interesting, Dave, is that you've had some channel stuffing here with people buying goods, really going out and buying goods right now to avoid the threat of the future tariffs. And so you've got a lot of noise in the economic numbers right now. A whole lot of noise.
The biggest single problem with economic numbers, and it's why the Fed has always, why I can't even fathom how there's 20,000 people that work there when the us do a better job of economic prognostication than the Fed does. I mean, it is the most monumental waste of money. And why am I always telling we got to audit the Fed and figure out? Because it's like, how many economists does it screw in a light bulb? And the answer is, in the Fed's case, is 10,000 of them, because they decided rather than moving the light bulb, they want to rotate the house. They don't have a fucking clue. And I'm sorry, but they don't. It's backward looking. Unfortunately, administration is the same problem, backward looking. They look at the GDP data and they're seeing channel stuffing. But if you look out a quarter, it looks ugly. It looks really ugly. And it's for a reason. And I'm saying this very clearly because it's visceral. I'm going to be Peter Lynch here. You can go out in Florida, in Miami, in its prime time. We are here in April, and I can't tell you how beautiful the weather is. Mike, you know it. It's been gorgeous. And the hotels are not full. The restaurants are not full. Everyone you talk to says it's down.
You guys were away, so we didn't get to do our dinner. But I will tell you, I went to Miami last week, and my wife comments to me that when she looked at Open Table, at every restaurant you could possibly want to go to all weekend, you could get any reservation you wanted. I've never seen anything like that in Miami.
2008.
You could go 7 o'clock. 2 people, 4 people, hot restaurant that's usually 6 months for reservation. It was just sitting there. Restaurants are empty. Miami is empty.
We went to a place that last year you had to wait. You couldn't get a reservation to. Big place in Wynwood. I'm not gonna name it. It's not incredibly expensive, but one of these hot kind of trendy places. There I think there had to be 50 tables there. There were 2 tables, 2 tables full when we went there.
Dallas
at 7 o'clock.
Dallas is the same way just a couple of weeks ago.
I'm people don't like to put stock in this, but this is going to show up in data in a month or two. So if you want to know why,
and you've seen the airlines, how nervous they are, and they've all been talking their numbers down. So
yeah, the world's in a recession. The data hasn't shown it yet. It will show it in a quarter. So what does that mean for investing? Well, if you're a U.S. company, your profits are going to be lower if you're selling stuff. right? In a couple quarters. If you're it could very well be that there will be winners and there will be losers. People, however, understand what's going to happen. All the bullshit with Trump and Powell, it doesn't really matter. There's lots of stuff going on. Elizabeth Warren, we talked about it, what she said. If Trump fires Powell and goes into some sort of weird power play with the Federal Reserve, then what will happen? Risk assets will do what risk assets always do when you inject a fire hose of liquidity, because that's literally the only reason he would do it, is to do exactly that. Bitcoin and gold Bitcoin will moon. Gold will continue its upward move. Inflation, blah 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 blah. We could game theory that out. Risk assets are kind of caught because corporate profits are going to be down, and they will be down. There's no doubt about that. But people are going to say, well, the money has to go somewhere. And so you end up making the same mistake. I mean, we could go on ad nauseum about this, but the bottom line is, if you want to know what's happening, is people are not buying U.S. stuff, and therefore U.S. stuff is going down in value outside of the world. In an interconnected world, I don't want to go all Thomas Friedman, but the fact is the world is interconnected, and this administration thinks it isn't. And if there isn't a resolution where it's very, very clear, and by the way, if I were Japan or if I were any other country, I would basically be saying, it doesn't make sense, and we'd be pushing back hard. I mean, this could easily turn into a big L across the board for the U.S. in a lot of places. So we'll see what they do, but the likelihood of pain is high. So now ask yourself in terms of Bitcoin specifically. Look, Bitcoin's uncorrelated. Yes,
well, that's not true.
This weekend. Mike, it's uncorrelated. Okay.
Okay,
it's
good. But you obviously have a different P&L than everybody else is holding it.
No,
it's silly to say it.
Bitcoin is in the last month.
Gold's up, Bitcoin's down in the year. What's up? And the stock market's down. What's correlated? I mean,
when you talk about correlation, you pick periods in time. Look at it every day. If you watch it every day, Bitcoin moves with the risk markets during the U.S. day. If you look at it from November, if you pick any time frame other than the apex of the pre-Trump rally, which is what you're doing, any time, it doesn't matter. We could pick 100 different time frames other than the apex of the pre-Trump rally, and you don't come to the same conclusion. That's the problem. And so, and people understand this. Do I expect Bitcoin to soften from here today if NASDAQ and whatnot keep going down? Yeah, of course I do. Do I expect gold to continue to outperform as far as this goes until until something happens? Yeah, I do. Bitcoin will outperform when it's grinding higher, and then Bitcoin will go through some face melting rally and pass it like it always does. But at the end of the day, there will be a more correlation between Bitcoin and gold than there is between Bitcoin and risk assets when we look back 5 years from now. And there are a lot of people who believe that. So if you look at what happened, Bitcoin went up this weekend, but more or less, we're still at the top of a trading range. I mean, maybe
we need to be above 88. I mean, if you're talking about it from a technical perspective, just quickly, I mean, to finally break lower highs and lower lows, for anyone who cares about charts, you got to get above 88, 804. Everything besides that is noise, but we are
which
we
one
are
is
clearly
that,
breaking out here right now. That's
what chart is that?
That's a daily Bitcoin dollar chart.
From where's the back of it?
This is right here is from January 25th when it made the all-time high.
Okay. Now, can you go zoom back out, another double the length of that chart?
Here's a weekly.
Yeah, weekly is
gotta get above here.
Right. But you see what you see if you draw it back from there. I mean, we had this huge rally in anticipation that the market has to digest. And Mike keeps looking at the correlation from this ticky top. If you go back there or any other place, to the left of the chart or any other place,
up only.
That's the point. And it doesn't take a rocket scientist. We've been doing this, we do this every week. And we were talking about between 78 and 83, 78 and 83. And I said 78 to 80 was a tradable bottom. We were sitting here between around 83, and now today we're at 86 or 87. All the time, what's the NASDAQ done in that period of time? What's the S&P
Now,
done?
well, here's the cues, and they're obviously down. They're down another 1.2% with Bitcoin up today. And if you take a look at this chart for the people who like Fibonacci's, you get the top to the bottom. That big bounce you always get, almost even in a bear market, that Mike loves to talk about, face melting rallies in a bear market, usually bounce up 50% and then head back down.
Go back to the weekly on that.
50%.
Go back to the weekly on that, and what you see, the same. If you got them in the same time scale.
Yeah, that's a weekly. Yeah.
Right. So you see, that looks very different. That's a
Yes.
grinding rally higher. Bitcoin was like blah, 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 blah. And then
this just made that first lower low. Bitcoin's been doing that.
That's right. So it's been different. And it's as I said, those are not correlated assets in the long term. And you can go back even further. It doesn't really matter where you go back to. Look, when the dollar goes down, when you're talking about the denominator, when you're printing money and people are buying because they have no other place to put money, and that's what's been going on in our stock market for decades now, then and that's why Mike and I agree on the extension, the market cap to GDP. And oh, by the way, if we're right about recession, that market cap to GDP, if the market hangs in even like this, is going to be even higher, right? That creates that creates certain bits of correlation. Anyway, look, the looking at betas and correlations, I know I harp on that, but it matters. On the other hand, that said, I tell you, it's true. Mike is 100% right. During the U.S. trading day, if you look down and you see Bitcoin just rallied, I haven't looked, but I'll bet you futures just rallied on S&P and NASDAQ, right? Because that would be a guess. And if it isn't, then that would be different. But
slightly, yep.
Yeah, exactly. So that's the point. And so, yeah, there's a partial correlation here because the money flows are correlated, and that matters. But this notion that Bitcoin is leverage beta is one that, come on, it's not. It's a volatile asset because it's, repeat after me, an option. And you have people who are dealing with this stuff. Did Saylor announce where he bought his Bitcoin yet this weekend?
He got it right here. Wow, and it's not small. Acquired 6,556 for 555.8 million at 84,785. So he's actually up on that. Yay!
He's been up on
he's
every
now at
purchase he's done.
67,766 per Bitcoin.
Right. So look, I personally think that his methodology of buying is dumb. I'm not going to lie. I think that that you could use that you could DCA in. Doing it over the weekend it looks like he's trying to create market impact, which never works. And I think a large part of this market understands that. That said, there are 60 some odd other companies going along with him now. And there are, and that's kind of a big deal. So, there's a lot of tailwinds for Bitcoin that aren't really materializing. But Mike's point, and I want to phrase it this way because so many people dunk on Mike. Most of what Mike's saying, I agree with. Literally most. We're in recession. Oil is, look, you saw what happened to oil over the weekend, right? It's very sensitive to that. But it's just this disconnect with Bitcoin that drives me kind of crazy.
That's it. But the one part that is right though is dollar weaker, Bitcoin stronger. It's just, that's just clear.
This is the dollar, James. People who are like, dollar's not crashing. It's at 98 and has been straight down over 12% since January. That is a monster move on the dollar. And for those who haven't looked at the gold chart, by the way, holy moly. That thing is absolutely insanely parabolic. Those two things are very, very meaningful. The thing is, when the dollar is weaker, you're supposed to see stocks and risk going up, right? So that's where I think a lot of the confusion comes.
That's right. So, look, I think that some of these topics are overplayed, but there are some very important bits here. So if this is a blow off top for gold, I don't believe that's true, by the way, then you invest in one direction. If this is a repricing of gold, because we know the money printer is going to have to get fired up one way or another, and the rest of the world is basically telling, the market is basically telling the president, hey, dude, you're wrong. The question is, will he realize that he's wrong, and what will happen? That's the question. And I'm really curious, what people are thinking. I don't know what the tea leaves are. And, it's like, he's been nuts and I can't phrase it anyone else on social media about a lot of stuff, right. But he did make one point, which is interesting, which is he said that the markets are going to demand from the administration a blood sacrifice. I don't know what the hell that means, but they're going to need to see people, some backing off, and I have no idea who it will be or what will be, but it does seem like there's going to have to be some changes, and the market can force that change. We used to talk about bond vigilantes. This is literally not just bonds. This is the market vigilantes, right? I mean, Mike, you've seen this before. I mean, we've seen this movie before, and it the last time we saw anything like this to a president of the United States, I was in college. It was Jimmy Carter.
Yeah, Mike. Go
Yeah,
ahead.
but we can all agree that the markets are not the economy, and that's been part of the disconnect here. And now we're starting to see the markets react to actual economic indicators that are not looking that great.
I mean, but I mean, look, Mike's obviously mad because I went too
loving
far.
this discussion. No, you didn't, Dave. Come on, you make me sound and look, and I mean, you educate us all.
I just want to go back to the 70s for a second, because there's no Volcker, and it doesn't really matter if there was. The biggest single thing in the 70s that I used to harp on, and I got into arguments with my economic professors on, it's actually the early 80s.
I can't imagine Dave getting in an argument with a professor.
No.
Well, try being a monetarist at Northwestern, and you understand that. But they completely missed, and Volcker understood, and Reagan understood the importance of sentiment and inflationary expectations on inflation. The Keynesian models of the day all said it would take 7 years of recession to grind the inflation out of the economy. They all said that, but they neglected the fact that expectation becomes reality. And people, once they believed it wouldn't happen, stopped asking for wage increases and just wanted to keep their damn job. But the problem is that kind of shock treatment to the economy worked when you had a 34% debt to GDP, not when you're 130 or 200. And that's a very, very big difference. So what does that mean? Well, it means that if you try the same thing, and people have argued 4D chess. I don't think there's any 4D chess going on. I think that there's a misunderstanding of the interconnectedness of the global economy and supply chains. And they did something that is just, nuts, which is assume U.S. could build and turn on a dime when we haven't changed any of the ability for us to build stuff, right? To me, that's a big deal, right? I mean, I assume that your economists, Mike, have talked about the fact that how long it takes to build factories here, and permitting and regulations. And, you talk about Doge.
Especially in certain states. In certain states like California, you're not
California
anything for the next 4 years. What's that?
Can't.
I said California.
Yeah, you can't. You just can't. And so to assume
Sierra
that we
Club
can build
walks in and says,
capacity,
"Nope, sorry, we've got the spotted, lizard from," and we can't impact.
Do not find a tortoise on the land where you need to build a factory, because even in Florida, you'll never get that factory built.
I mean, it's crazy if you think about it. I mean, there have been 4 permits as of last week issued after the fires. 4, 50,000 houses destroyed. I think that was the number. 4 have had rebuild permits issued. I mean, this is the state you're dealing with, and it's not just them. I mentioned last week there's been not one mine for rare earths approved, despite the fact that that they're like the Pebble mine. I think it's in Alaska. They got a environmental impact statement. Doesn't matter. Still not approved. Forget refining rare earths, which is even worse. Or the leaching. You can't do it. So that's a real problem. And if we don't fix that, you can't talk about trade deficits.
So,
it exist.
I do want to hear, because look, on the pre-market trading, IBIT, FBTC are up. They're both up like 2.7%, and then from Friday, and actually from Thursday. Sorry, the futures are down over 1%. I am interested to hear what, and this is actually an indicator of what's going on in the world. I'm interested to hear what Mike does. Like, what do you think is the cause of that? Do you think it's an anomaly, or do you just think it's just I mean, how do you
Mike
how
has
how
said
do we
Bitcoin's throwing.
how do we explain? I mean, I think it's a lot has to do with the dollar, and there's no flight to safety to the bonds right now. They're going into gold, and it looks like Bitcoin is sharing that. But what do you think, Mike? I mean, I'm not trying to put you on the spot. I just really am interested in what you think is happening.
First of all, I never get mad when someone disagrees with me. I really appreciate the views, but I am entertained by having been doing this for almost 4 decades with mostly people who are traders, not people who are long stuff that's got lots of speculative in it, is how crypto people get mad when you disagree with them, and they love you when you agree with them. So I got to show a few screens real quick, and I'll piggyback on that. First of all, the most volatility, discombobulation happens in bear markets. This is 200-week moving average of Bitcoin overlaid with the S&P 500. Good luck with that not being correlated. It's that same chart. So I just look at the 200-week moving average in Bitcoin's 46,000. Sorry, I think we're going there. Not a big deal. The 200-week moving average in the S&P 500 is 1/10 that, 4,600. Sorry, I think we're going there. Right now, this is a bit of an historic anomaly. Maybe it's different. First sign of that really happening, if Bitcoin can sustain above 90,000, if it can do what it's doing today, if it can break above those levels, I look at it as a trader. You bounce up above levels, you put on a short, you put on a stop. If you're stopped out, then you go you go for what's the stop proved you wrong. Right now, we haven't done that. We're just bumping up against the upper end of the range. Same with Ethereum. Maybe it gets to 2,000 again, put stops above, test shorts. Here's a key thing I want to play with and show you, the thing I learned early on. Peter Stoudemire, market profile. This is just a Bitcoin to gold ratio. It got way too expensive. We all identified that last year, and it just got back to 25x. That's the high volume price from last year. That's nothing. That's the mean reversion. It should bounce from that level. So Bitcoin to gold ratio. But I just want to show you how this works. And Dave always points out you have to point out different points in time. So let's go back just a full year, 2 years of that. The Bitcoin to gold ratio could easily get back to the mean around 15. Let's go back to another 2 years. 2022. But a key thing, the point is why I'm making it, this asset has gone so far, so fast, that people have to realize when money leaves the system, which is just starting, you hit the stuff that's most expensive, most volatile. Even if people say it's leveraged gold. This is part where I get to 10,000 Bitcoin. That if you just go back to the most significant money pump in history, which is what we're doing now. We're learning all the lessons of pumping too much money in the system, getting inflation the highest in 30 years, and then you start the reversion. We've got a great reason from that. You can get all the way down to here. So that's just a point I want to make, and it's if there's institutions coming in the space, why is open interest plunging? It's down 36 from the peak. And why has there been $5 billion of outflows from Bitcoin ETFs in the last 3 months? I'm just pointing out facts. Sorry, today's great.
Dave, before you jump in, Mike, I want to ask you another question. So sorry,
yeah.
were you finished? If not,
go ahead. You go. No, but I just find it out is I said, remember, this is the person who has been very bullish in the past. I called for Bitcoin to lose to zero from 10,000 in 2018. Sorry, it got down to 3,000. It's the same thing now. The thing is, it's just so much more commoditized. It's so much more financialized, and there's so much people own it. And the key thing I get is that it's the reaction you get from people. I've always used it. It's the human nature. They look like me, they're shocked that I could say get back to 10,000. Well, it's just where it was a few years ago. That's the point. We're way too over leveraged long a very highly speculative risk asset that people view as digital gold. I've always viewed it as digital gold. It just got too expensive. All commodities get too expensive, and then they get to low price cure. Now, I think we just haven't done that yet. And this is
to me, that Bitcoin gold ratio back up.
Yes.
You haven't? So here's my question. Obviously, you said something gets overextended, and then naturally that's the thing that sells off. And can we argue that gold is getting overextended now from a trading perspective? Any trader who's been buying that as a trade is looking at 3,400 and saying, "My God, I've got to trim." Right.
So let me give you.
But the question is, if it's actually China and a central bank buying, and they're price agnostic, and they're just trying to gain more exposure, then all bets are off as far as traders and charts.
So it's all bets are never off for rational traders. And this is just my background. And it's a key thing you learn sometimes is some people are fundamental, some people are technical, some people are both. I'm everything. But I remember from the technicians, some of the best traders I know, most of them are retired or dead, would point out that they would not, please don't talk about the fundamentals and distorts my view. So I just want to point a few things about gold. I'm on the tips, just ready to write a published report about gold getting expensive. Now, just remember, people say it's the stuff you say. This is not stuff I say. This is stuff I repeat what I publish on the Bloomberg terminal. Remember, there's I know how many million, almost thousands of professionals will use that. So I just repeat that in the show. And I'm going to point out right now, gold's up 30% in the year. In the last 100 years, there's only been 8 times. It's been up only 30% in the year. The most recent example was 2007. I was very long gold because I had the same situation as now. I was more of a trader. I thought everything was too expensive. Yes, it went down a little bit in 2008, but only gave back some of those gains. So I just want to point out the other times, every single one of them was in the 70s, and almost every single time crude oil was rallying, was up almost 50%. Right now, crude oil's down 12%. This is the epic deflation from the inflation that some of us have been speaking about for 2 years. Typically it takes a couple of years. Remember, there's a quote from Roger Babson in 1929. It's all kicking in now. And I think that's my point, is when money leaves the system, you hit and sell what you can. And yes, I agree with Bitcoin is digital gold, but that whole space, even the fact that Dogecoin is up more than Bitcoin, to me says this is short covering. The risk is it goes back down, and the risk is we have to get cheap. And we always do that. But one good example is just recently natural gas got really cheap. It got down to 1.5. It bumped up. That's just a shorter term thing. So I look at it as a commodities. It's a number on it as a commodity. It's a number on the screen. And be careful with the fundamentals. Just watch what the market's telling you right now. Yes, it's showing some divergent strength, but here's the key thing about still bullish gold. And bottom line, it's very simple. I'm much more in the Warren Buffett camp than the Michael Saylor camp. I've been in the Michael Saylor camp before, particularly 2020, but he pressured he tempted the market gods. I think Dave's doing that now too, and I just like out. That's why I still point out Bitcoin to gold ratio is the same as it was in 2021. I'm sticking with gold. It's expensive. That's where everything's getting expensive, and I still want to point out one key thing that's going to happen is, yes, they're hitting treasuries right now, but believe me, if they're hitting treasury, that's the worst for the stock market. This is the average of the yields of the top 3 exporting countries on the planet: China, Japan, Germany. Their average is 1.8%. We're 4.32%. Now, we've seen this before. It's a short-term blip, but at some point, I think we're going back down here. We've seen this before. I made the same calls in the past. I've been early. I've been wrong on this one. But to me, that's where we're going. The rest of the world's deflating rapidly. And we haven't broken, we just broke some trend lines in the S&P 500. We get to 4,000, which Gina's looking for. Then things get serious. Right now, it's just been a minor correction in a bull market.
Okay. Scott, can you share, hold on a second, Dave, can you share this chart? So here's normalized, what you're looking at here, normalized chart for 5 years back. The white line is the NASDAQ. The green line is NVIDIA. The orange line is Bitcoin. Now, Bitcoin's lagging the adoption of NVIDIA. And so here's what's interesting to me, Mike, is I think you're just looking at Bitcoin as just a pure risk, pure speculative asset, and that is the way you're seeing it, and that's fine. This is where in my opinion, differ. I think Bitcoin is being adopted, just like NVIDIA is being adopted by computer makers, the high speed, the high performance computer makers and the cloud engines. So this is a picture of an asset that's being adopted, and it's in the adoption phase. I mean, you can pick out any of these little periods here and say, yeah, it was correlated. Nope, it wasn't. Yes, it was. Nope, it wasn't. Yeah, and to Dave's point, you pick out periods where it wasn't correlated to the overall market. Maybe it was leading it. Maybe it was just more volatile than it. But this period right here, it's not correlated right here. Maybe Bitcoin let it down, but it's been holding this level here while the NASDAQ has ground lower this whole period. Now, so what I'm saying here is that this is, I believe, an asset that's being adopted. And you know that because of the hash rate. And we go back to the hash rate over and over and over and over and over again. Why does it matter? I quoted this in the tweet last week, and that it actually has to be updated. The Bitcoin is using 180 terawatt hours of power. And what does that mean? That is the equivalent of 21 full-scale nuclear reactors using energy for this network. What's important about that, Mike, is that no other cryptocurrency that you're talking about has anything even close, like nothing even close to that kind of backing and that kind of adoption rate. So the actual, what we ought to be looking at is the adoption rate and the hash rate to understand what's happening behind the scenes. This sometimes the volatility of it has to do with the adoption phase of it. And just like you are looking at it that way, many people are looking at Bitcoin as a speculative asset and hoping that maybe they'll get rich off of it and trading around it and levering around it. And that's all fine and good. But if you look at the long-term chart of it, it's being adopted. That's reality. Now, whether or not that hash rate is being driven by sovereigns is another question. And I don't want to get into just a Bitcoin only show here, but what's important about that is we have to understand that hash rate is being driven higher at the expense of the current mining environment and the current public miners. They cannot keep up and stay profitable like
and
this.
they're selling.
This is insane. And so why is that happening? Who's mining at a loss? That's a good question. And I think we have some speculative answers there. But it's not just this thing is just a whipping around on a trading desk or in the exchanges. This is something that's happening behind the scenes. And so it's much bigger than that, in my opinion.
But we did see that publicly traded miners quickly, Mike, just to support that March was the biggest month of selling in very, very many months, if not years, by public miners, and they just have to support the business, to your point there.
It's silly for people who have a vested interest in the price going up to add to that. I mean, being in the commodity space all the time, producers should always hedge by selling normal backwardation. But okay, so James, that's you quoted things I was said 8 years ago. Got it. Bitcoin is being adopted. That's my point. I think we've reached a peak. Let me finish. At 100,000, with the launch of ETFs, I said that for almost 6 years, as soon as we get widely disseminated ETFs, that'll be a bit of a peak. We've gotten that. Now, my main premise is once we flush out some of the excesses in some of these silly cryptocurrencies like Dogecoin and Shiba Inu and all those, then we'll see a bottom. I don't see signs of that. So first of all, for me to get so more bullish, first of all, close above 90,000, stay above there. Ethereum, close above 2,000, stay above there. Bitcoin to gold ratio, which I'm showing you here. If it's Bitcoin's so great, why is it the same as it was 4 years ago? So that's my point. If Bitcoin can't beat the boomer rock, something's wrong with Bitcoin. That's my point. Once I see maybe inflows in ETFs start picking up, and I mean for a couple months in a row, yes. Let me finish. Let me finish. And once I see open interest in futures start picking up, yes, it's a good sign. My point is right now we're seeing a little divergence bounce. I'm pointing out. If we keep going down in the stock market, money is going to leave the system. All these speculative X's will continue to leave. And if Dogecoin goes down, you see the correlation. Bitcoin's much more highly correlated to Dogecoin than it is to gold or S&P 500.
But Mike, gold has been around for thousands and thousands of years. Bitcoin's been around for 15.
Yes, and it's had a great run, the best performing assets. I'm just pointing out, I think, so simple. I'm in Warren Buffett's camp. We can disagree. Obviously, it's great to disagree.
Warren Buffett, by the way, has never gotten technology right. And Warren Buffett is, and I want to point out something about Warren Buffett because it matters to the next comment. Warren Buffett is the single biggest beneficiary of financialization on the planet. Warren Buffett has made most of his money by buying, famously he bought insurance companies, he's bought some other stuff. Yeah. He has made his money on the basis of the massive amounts of monetary printing and debasement, which has created this massive trend to where the financial industry has more than doubled its value inside of the real economy, despite adding no more value to the real economy. And anyone who's ever negotiated, if you've been on a derivative desk, Berkshire and Buffett and Munger before he passed away were the worst people on the planet to negotiate derivatives with.
Yes.
That they squeezed every single penny out of it. So every time people look at him as a kind old grandpa, no, he's a shark, and he is literally the most emblematic human being of why we have the greatest wealth inequality in human history. And it is really true, is because when you pump the money supply, you make money to people like Buffett. But he never got technology right. He's always been wrong. He was wrong.
I meant one thing: cash.
And he tells you that. Yeah. And he understands that. So, but let's go into it because there's two things that you're saying that are really problematic. Number one,
show my screen. Prove to me that gold, Bitcoin. That's 3 or 4 years now that Bitcoin, that gold is the same.
Look, Mike, two things. First, in
first of all, 2021,
you're right.
Bitcoin
let the market decide. Its adoption.
It's silly.
Scott, pull up the Bitcoin hash rate long all versus
All right.
Bitcoin price. And in 2021, Bitcoin got way the fuck ahead of its network development. People, it was a hype cycle, and we had all sorts of shit. We had FTX, which people, at the bottom of FTX with forced selling of basically half the industry collapsing. They couldn't get it below 16,000. It V-bottomed back to over 20. So when you talk about 10, it makes my head hurt. You're basically saying it's going to fail. But okay.
No,
the
that
fact
never
is,
fail. You said that. It's not a
could.
failure. No, I wouldn't call that a failure. I just call it a normal backup like Amazon did, and then it became the best asset ever. But it had to flush people out. We haven't flushed people out. Let's put it this way.
Is still trading at a 90% discount. And so you need to, and I
in
say
your
that,
view.
Well, in the view of people who are buying it, and the people who
of
are
course,
selling it are taking it.
Of course, they're bullish.
There's price setting and there's whatever. But when you look at your chart of the S&P and Bitcoin and all that other stuff, you have to factor out the global M2. You have to, because that's literally that's what it is. Gold's going to trade around it. Everything trades around it because you can't ignore the denominator. Now, Bitcoin has had its own unique stuff, right? People got really too excited in 21. It went way over its skis. Its adoption now is there. You're saying ETFs was the apex of adoption. No. The apex of adoption is when people are buying Bitcoin in spot and when the economy around Bitcoin allows that to happen. This weekend was a massive announcement on Saturday that we have to talk about. And if you think that this isn't relevant, you're not paying attention. Charles Schwab said they're going to offer Bitcoin and crypto trading within the next 12 months. Now, Morgan Stanley said they were going to do it through E-Trade. This is Charles Schwab. And I know that this is serious. I can't say how I know this is serious. And I know this is serious because now all of a sudden, if Charles Schwab is doing this, every single broker dealer is going to let every single financial advisor trade Bitcoin spot, not just ETFs and not only unsolicited. They're going to put it as part of portfolios. That is a massive piece of news. That's why it's up today, in my opinion. In my opinion, this piece of news is why Bitcoin is bucking the trend, not because people have all of a sudden got religion, hallelujah, Bitcoin is more like gold, but this is the reason. Because smart people understand this is a major, major piece of news. Now, every time we've had major, major pieces of news that I've thought about this, it's been early. When Paul Tudor Jones said it was the fastest horse, it kind of it went up a little, and then a few months later, it exploded. We see these sorts of gap volatility all the time. So those are two things. Adoption, it's not done. Bitcoin is still held by a vanishingly small percentage of people with wealth around the world. It is not even close to done. I'm sure James has these statistics in the deck he uses to talk to investors about. So the adoption of Bitcoin isn't done. If it were, if you told me that over 50% of all the people who could own Bitcoin do own it, then I would say, Mike, you're probably right. But we're at 7%. That's a very big difference. And that doesn't even count the sovereign side.
I think it lends to the question which Mike would ask, which is, and I would ask as well. I agree with everything you just said, Dave, but this is plumbing, right? So we still need the demand. Those people have to, my question is, even with Schwab coming in, how many people who really wanted to buy Bitcoin or get Bitcoin exposure didn't find a way outside of their Schwab account?
Yeah, but the problem is Wall Street has taught us something. Wall Street teaches us when salespeople, it's like if you run a company, you need have no salespeople. If you don't have salespeople, you don't sell product. I mean, you sell some, but you don't sell product. The fact that there are tens of thousands of salespeople that are by the end of this year going to be able to sell it is a very big deal. Right now, you have to jump through hoops to buy it. You still do.
Two things. Yeah, I agree. So really quickly, I just want to point out that the market did just open. The Qs gap down and are actually making lows, and Bitcoin currently is pushing to new daily highs. So we now have the market open, and Bitcoin did not drop alongside everything else, which I do find interesting. Mike, one thing I totally agree with you on, but also want to push back on, is the notion that we have to lop off a zero of all these altcoins that need to go all the way down. I would just make the argument that if you've been watching, this is Bitcoin dominance. I mean,
it's a bull market.
Has been nothing but a steady train upwards. And if you look at most altcoin charts outside of the largest ones, which by the way are still down 80, 90%, you have everything has gone to zero. And I would argue that this time's been different than other rises in Bitcoin dominance because that used to be in the washing machine market where crypto natives would get bored in Bitcoin, go buy altcoins, then the Bitcoin would go up, they'd go back and do this circular thing. This, to me, when I look at this anecdotally, but also we have new buyers of Bitcoin and we have people exiting alts entirely to cash because they need to pay their bills. This money this time is not emblematic of altcoins selling into Bitcoin out of FOMO. This is capitulation in altcoins that have largely gone to zero and new buyers buying Bitcoin. That's all I would say to that. So I agree with the notion that there's a lot of froth, obviously, in the altcoin market. I would just also say that from watching that market so closely, seeing new things that should have been heavily hyped try to launch and come in under like investor FDV that was supposed to be a 10x. This is not happening right now in the altcoin market at all. I could make the argument that it's already died, which is what you're looking for as a signal.
Well, I mean, look at 30 days. Just Mike, this is just data. Bitcoin up over 3.5% in 30 days and 7 days, but which is interesting. It's basically about the same. Ethereum on a 30-day basis down 17%, right? Dogecoin on a 30-day basis down almost 7%. On a 7-day Dogecoin down 4.4%. They're not. Bitcoin is outperforming in a very, very serious way. That's just data. Anyway, keep going.
Mike.
So I don't disagree with that. I think the key bull markets that I remember speaking about in 2018 in Hong Kong when Tether was $2 billion, that's a bull market. The proliferation of crypto dollars, bull market. Complete bull market, I think we're going to continue as Bitcoin dominates. I think it can get back to 90%. But to give you my big base cases, I think Bloomberg Economics is looking for a 30% drawdown in the S&P 500. Okay, we've got 10% so far. Bloomberg Intelligence thinks we're going to 4,000 S&P 500. I think we're going to have a normal 50% drawdown in the S&P 500. It's happened 2 times in the last 25 years. This is the most expensive market in history and got the best rule forever. When you take money out of the system, you hit the stuff that's the most vulnerable. Whole crypto space to me reminds me of what I read about stocks in 1929, when I remember trading in stocks in 1999, what happened with the housing market in 2006. I mean, it's a complete cult. And just listen to some of you speak too, is you get mad when people disagree with you and you point out facts of the future, which is, I appreciate your opinions, but just remember things we've pointed out so far in this show is Bitcoin peaked when the amount of ETFs in Bitcoin reached on a risk-adjusted basis, same as gold, just a few months ago. Now, I just pointed out I've been involved with that one for quite a while. People always said, oh, people are going to buy gold. Well, they're starting to do that finally, but they don't usually do that. And Bitcoin's kind of that space. When you keep telling me about institutions coming, I've heard that from Mike Novogratz for a decade. I get it. And he always says it sometimes in bear markets. Now I have better ways to really see that. I've always looked at the hash rate. I get you. Remember, Scott, I've been on this for a long time. The point is now I want to see the beef. Let me see an open interest in futures. Let me see an ETF inflows. I'm seeing the opposite. Let me see that. So it's great to see the bounce today. So I'm like, wonderful. Can you break above that resistance and continue to do it? I think the next key thing we're all looking for is amount of wealth destruction, very, very reciprocal to the amount of wealth creation. It's not complicated. It's always happened in history, and we're just starting the process. And I think this is part of the bounce. Maybe I'll be wrong. That would be wonderful if I am. But to me, when you see all those excesses and the meme coins and things that are worth $25 billion that are jokes, yeah, that needs to be purged. That means the whole space is going to get, and I think everything is going to get, then we're going to get the deflation that is reciprocal to the inflation. Cryptos are just the leading edge of that.
James.
But you've got it backwards, Mike. Bitcoin doesn't go up because of cryptos. Cryptos go up because of Bitcoin.
I get it. But so it has millions of dependents that need Bitcoin to go up. My point is, dependents can drag you lower.
And they have. I mean, the crypto selling, the crypto native selling over the last 3 months has been unrelenting.
Yep.
And so it's the issue is at what point does that stop? And when?
So you think it's over? I don't. That's all.
I just don't think they're selling Bitcoin, Mike. I think if we're talking about the crypto natives, I really think that they're all like very optimistic about where Bitcoin's going and insanely bearish on the altcoins that they're just dumping off every time they need to pay a bill.
So what happens is excessive optimism in markets. That's my point. We just need to purge that. And there's still too optimism. We haven't had a normal lower price cure in this market. And maybe we'll be lucky, and we'll just be, it'll have stopped. It's great after. So here's the key thing I always pointed about: once you launch ETFs, you're in the mainstream. Bitcoin was great when it was insiders like us years ago. I mean, I wasn't an insider. I just grabbed on as Soros says, a bubble and joined it. Now I just think it's imploding. It's just giving back, and I just don't think it's done. That's not a big difference from your views.
The difference is adoption. I've said it a billion times.
No, I don't disagree with that, but it doesn't
and
mean.
so Bitcoin at full
beef.
adoption, Bitcoin at full adoption is more than 10 to 15x here. And so
That's a good view.
These moves are squiggles.
Okay.
To that, and that's
exactly.
a long-term thing. Now, I'm not, I had a post where I criticized Saylor this weekend because I'm so fucking tired of his metaphysical crap. I mean, James, you talk to the guy and he's friends, but every time he gets metaphysical, I feel like he's doing exactly what Mike said. He's tempting the market gods, yada, yada, yada. It's just, he's not a philosopher king. He's someone who identified Bitcoin as an asset that will reach its potential, and and basically continues to push all his chips into the middle, and he's been able to acquire more chips. That doesn't mean he's a philosopher king. It means he made a smart bet, and I think ultimately it's going to pay off. And but all the metaphysical stuff is crap. But the simple things that we care about are the denominator, the amount of dollars and the debasement and the fiscal, what's going to happen, to, our budget deficit, what's going to happen in Europe with Germany going into budget deficits, the amount of monetary printing. Japan, has been at 200% debt to GDP for decades now, literal decades. And the reason they can is because their population was captive and saved in their postal system, and that's why they have it. They're kind of in a rock and a hard place, and they look at what Trump is asking them to do as, you've got to be kidding me, because they're balancing their house of cards. But this monetary difference, this monetary environment we have, the fiat system, is it is certainly looking rickety right now, and because it was based upon globalization, it was based upon deflation in goods production by being able to offshore. Those trends ending are massive trends. I mean, I hate to get all fourth turning on people, but that's massive trend. And a lot of the people who have dollars are like looking at it and saying, well, okay, wait a minute, that's why Bitcoin is up. That has nothing to do with everything else. Just to be clear, Ethereum, the thing that Vitalik said this weekend, in my mind, should cut it in half. I'm sorry, I own some. But it should cut it in half. The notion
what did
that
he say this weekend?
He said maybe we should move away from the EVM and go towards.
Basically said maybe we were wrong. Let's do something else.
Right. Now you do that, and you look at that, and this is where I get all Mike McGlone on them. It's like, well, but it's a $200 billion market cap, based upon its potential, not based on its cash
Some
flow.
see cut it in half, and some see depression buy signal. Like, yeah, that has to be the bottom kind of thing.
Yeah, well, it could be, but I look at this and I say, why should it be a $200 billion thing? If its potential is based upon something that we now say doesn't really matter. So look, we could talk about all this stuff. The TAM to all of crypto is big. I think it's really interesting. The last week, the only other crypto in the top 12, I'm looking at actually in the top, basically the only crypto in the top, 12 that is up other than Bitcoin, anything substantively over the last 7 days. Well, Solana now is, because it's been rallying, but it is Chainlink and Solana, which have had incredibly good metrics. BNB has been up a little bit, but when you look at this,
that's good, because those are the ones that should be up.
But that's the point. The point is the market isn't necessarily as stupid as it's been. Now, is there stupidity in the market? Yeah. I mean, I every time I see people talking about, I see Fartcoin up 7% today, and that just makes me crazy. And I start agreeing with Mike. I'd like,
Sorry about that.
It's just
it's so fun if we agree.
It's so true, though.
And those things are crazy. But the point is, Bitcoin. There's two things that matter for Bitcoin. Number one, by far, in orders of magnitude, is adoption. And to talk about its price as having peaked, remember, inelastic supply, not the same as commodities. The commodity super cycle happens because when prices go up, supply expands because people start investing in pulling the shit out of the ground. Bitcoin, you can't do that, but it's happening. People are investing in it to try to pull, to try to mine it, but it doesn't change the supply. And so the hash rate is basically a hash war developing. It's more and more people thinking this is serious and investing. Will they ultimately be wrong? maybe, but the difficulty adjustments in the network and whatever will mean the network is more secure. It's a different dynamic, and that's why it's different. I want to be, I can't stand the fact that people keep saying that we have over optimism in Bitcoin. I mean, the fear and greed index has been fear or extreme fear now for months, right? It's not like there's, we get on these shows, and on days like today, we'll go on Crypto Town Hall, and people will probably be, oh, wow, look how great Bitcoin is, and they'll be happy. But those are not the people who are putting money into the system. Those are people who are saying, oh, God, please, dear God, I need to, I need to make my next
like
tuition.
Mike said, they're praying for their bags. Yeah,
that's right. and that's different. The actual technical traders and the people on the margin all are looking or hoping to get 88 or 89 to sell because they figure it will fail at resistance. And I think they'll probably be right, because I think we're still in a range until we get more adoption metrics, until we get out of this. The question is, what happens when the market, when the administration decides they need to rescue the markets? That's what the question. What happens when liquidity enters the system? God forbid, we spend our time firing Powell and decreasing the independence of the Fed, and the Fed becomes a political appendage of the White House. Every at-risk asset will go up. Bitcoin will go up by an order of magnitude more, I think. I think that could be an absolute face melter because of that. I mean, James, what do you think? I mean, in terms of what happens if
so much
that
liquidity, yeah, because you'll have yield curve control to oblivion.
I think that it would be bad. I think that the ultimate, crack up boom followed by potentially, I don't know about hyperinflationary collapse, but a crack up boom followed by a collapse seems at that point. But the collapse will be in the real economy, not necessarily in the fake economy.
I mean, like there's a tacit relationship in the worldview that the central banks are not part of the government. That's that's kind of the belief. And if you break that, then you break the confidence in whatever currency you're talking about. I mean, because you break the confidence in those treasuries. That's the issue.
So the key thing, I think, is timing. We've had the biggest crack up boom ever in terms of pumping liquidity in the system because of COVID. Now we're starting to collapse, in my view. I like to see it be proven wrong. That's my point, is when people like Larry Lepard write about the next print, we've had the biggest print ever. It's never unprecedented, the amount of money we added to the system in 2021, 22. Now we're finding the results of that. The rest of the world has nothing but facing downward estimate of GDP revisions. I'm talking about just removing money from the system, but not money from a normal level, from the most expensive U.S. stock market ever. It broke the trend line versus the MSCI ex-US index that it rode since 2009. It's breaking down. So it'd be wonderful to see if this highly volatile risk asset that's been highly correlated, that was born of the end of 2009 of that massive pump in liquidity, will diverge. That's my point, is the whole space, I think, is just heading lower. We're seeing a bounce. But so my point is, it's very big picture. And then I try to narrow it down to small stuff. So I agree completely with the adoption. I remember, I've always said you can't hold gold anymore without some Bitcoin in the space. I just think we're in a bit of a downward trajectory where this is finally, we're going to purge some of the excesses and Bitcoin's going to come out ahead. But I said the exact same thing in 2018. It was going to lap off a zero. That was around 10,000. It bumped up a while. It got down to 3. Not big difference. It was the end of the year. And the difference, like I said, is just remember, I'm just pointing out unbiased views of what happens in highly speculative markets that move a lot and have a lot of dependence in things. That's my point. Is it's just heading that way. So maybe you can stay above 90,000 if the stock market is going down. My point is, again, we barely started this correction. This is replaying to me like 2008 again, which when I was again overweight gold and underweight all risk assets. To me, this is worse, because now we have this shift in government. We have this paradigm shift in tariffs and austerity. And the rest, and we're shutting off. This is a complete shift in the post-World War II order. But to point out something that's really positive about this, the self-correcting mechanism in America is unstoppable. Once we get through this period, by the time we get the midterms, if things aren't really going in Trump's favor, we'll push back. And by we get to the end of his term, it's over forever. But the key thing is, we're talking about some of the most highly speculative risk assets on the planet. And there's a lot of people speculatively long. We all know that. I'm just talking about purging for now, and I'm looking for those good signs of that being over. And I'm pointing out, I've heard this in many other markets before, I just don't think we've reached that low price cure yet. And I'm sorry for people who are overweight trying to get rich, but that's the key thing that always happens with human nature. You see other people do it, you hear about other people do it, your wife's best friend's husband did it, and then you get overweight and it just flushes you out. So here's the key thing I'll end with. unfortunately, the only reason I compare Michael Saylor to Buffett is just overweight cash or overweight Bitcoin. I think, unfortunately, we all know when you have people like him who extol things like taking an inordinate amount of risk in one asset, oftentimes what history proves is you got to stop them out, you put in the bottom, and then you go up, unfortunately.
So, okay, but hold on, let me just say two things. First, I agree with you that the market got way ahead of itself. The general, tech market in particular, for sure. There is a speculative bubble there of sorts. But there's another bubble. And so you talked about the biggest print in history back in $5 trillion we printed back in 2021, 2022. But there's another big bubble that is the reason for that. And the reason for that is the debt bubble. We are so financially leveraged, and it's not just the country, it's sovereigns, it's banks, it's individuals. We are so levered all the way through. The amount of leverage in the system, now we're running 120 debt to GDP here. And the reason that matters is that, and this is where Larry's point is, and Larry and I disagree on timing of this a little bit, but the reality is we are in such a leverage bubble, Mike, that there is no choice but for these central banks to keep the charade going and print to fucking oblivion to keep it going, because you have to have more money supply out there to deal with all the debt that you've piled up. You've got to make those dollars and make those currencies cheaper. And there's the only way you're going to be able to pay down that debt, or at least keep up the charade. And
what's
so
the trigger for that to happen?
That is very.
So it's not binary.
It is. The trigger for that to happen, I just one point on that. Completely agree with that. The trigger for that to happen is risk assets going down. Why has the Fed not eased again this year? Because risk assets haven't gone down enough.
Because
the trigger for it to happen is
bonds could do it. Bonds could do it.
It's
Dave.
unemployment.
They'll buy
it's a lot
bonds.
of things. So there's 2 points that I want to pile on top of James. First of all, which will come to a conclusion.
10:02, Dave. So you got a TLDR.
Point one, it pushes every dollar printed today does significantly less benefit to the economy than happened in 2008. So it takes more. And point number two is, as unemployment and it hits the working class, that's what's going to push this administration toward taking extraordinary measures. It's not necessarily the stock market. The stock market is reacting, but less than you might think, to what we're saying is going on in the economy. The result of that is you ain't seen nothing yet. If you think 2000 and COVID was the biggest money print in history, my prediction is it's not going to even be close, because it's additive. We haven't taken any of that money out of the economy. It got printed, it got pushed in, it's all there. And that denominator is how you measure all assets. And that's a large part of what you've seen.
A lot of that money went into cryptos.
Scott, share this really quickly. This is to Dave's point. Every single dollar of debt that we issue is creating less GDP, and it started the Great Financial Crisis. Every single dollar, and this is the problem right here. You're getting diminishing level of real productivity off of the debt, and that means you got to keep printing to get that GDP up to where the debt is. That's just reality. And you've got to get it above to start paying that debt down.
Turning Japanese, the 10-year note yield there is 1.3%. I think that's where we're heading with our 10-year note. Oh, China, 1.6%.
Believe me, if you did,
3.34%.
the Secretary of the Treasury would be a very happy man, because that's what he wants.
Yeah, they'll get it.
Do you know what's incredible? I could be wrong, but I don't think we said the word tariff once in an hour.
Beyond that,
on a
we're beyond
macro
that.
show. Does that say something?
Tariff. Well, it's because we're all looking at it as who the hell knows what's going to happen, Scott? And the world is basically telling us that the economy is going to be a depression if things don't, if we don't get back to some sort of normalcy. And we're always kind of looking at it saying, well, can they, who knows?
I don't know if the world is or if gold is, because that chart is just
mind-blowing.
Yeah.
That is exactly what, when you used to listen to Greenspan's press conferences back 20 some odd years ago.
Oh yeah.
He would say, I'm not worried about gold. I'm not worried about gold. Right now, if he were running the Federal Reserve, he'd be worried about gold.
Yeah.
And that would be a trigger to have his buddies at JP Morgan to, you may want to some futures. I don't care if you have it, just do something about it. But I don't think that there are forces allowed to do that anymore.
It's
there's
such a
too much
global
transparency.
market. I always kind of, we don't have to get into too much. It's huge global. I mean, U.S. might not like it, but a lot of people in China and India and Turkey like gold.
NASDAQ's down 2.4% today. Bitcoin's up. I do have to say, and Mike, you have said repeatedly over the past 2 weeks on all the shows, Bitcoin is showing relative strength. Let's see it continue.
Divergent strength. That's
Divergent
exactly.
strength. Yeah, that's correct.
That's the mic word.
Strength. And today more than ever, because usually those
very
Sunday
impressive.
pumps retrace the minute that the market opens on Monday.
If the stock market keeps going down and Bitcoin keeps doing this, yes, that's a very significant sign of everything you've been saying. We'll see if that can continue. I just use oftentimes that's what bear markets do, give people hopium.
I can't wait till next week.
Oh my God, dying. I actually think you guys are gonna have to run it without me, because I think I'm gonna be on a plane to Dubai on Monday. So yeah,
come on, dude. You're not gonna have your own little cabin with.
I'll try, but I don't know. The internet on Emirates is non-existent. Literally doesn't work the entire flight every time. Anyways, guys, what a show! 10:06. I feel like I'm just start slotting you guys off for the entire Monday, and we're just gonna like rotate in and out between meals and stuff and just talk for 8 hours while the market's open. What another great show. We will obviously, I'll be back tomorrow with the Arch Public guys, but another amazing macro Monday. Dang, I just realized I'm gonna miss it by like 2 hours. It's so annoying. But you guys will be here, right? You won't leave our audience. You're better without me anyways. Maybe we'll get Noel in here to civilize you gentlemen. Or we could get Larry in here to uncivilize you gentlemen.
Yeah.
Mike, can we get someone else from Bloomberg that's extremely bearish? A fourth bear?
I'll be the referee.
In case you're watching, Larry.
We can have Larry on.
So, Scott, you and I have been talking about doing a show. I think the first one should be me and Larry.
I'm ready. Let's do it. All right, guys, we got to go. 10:06. Thank you so much. Dave has a money printer literally behind his shoulder. He believes in this so much, guys. We will see you next week. Later. Bye.
That's dope.